Australia has been lucky once again. Their vast territory is unusually rich in natural resources, and the current craze is iron ore. In Western Australia alone lies nearly a third of the world's supply. This resource is critical for making steel. And Australia got lucky because since 2000, China substantially increased world demand. Mining is driving an incredible 20% of Australia's GDP growth, but a huge opportunity was missed. The mining boom is the largest shock to Australia's economy in generations. It might not seem like it, but this is affecting average wages, the cost of living, and even how much people are paying for rent, whether employed in mining or elsewhere. This industry has become so huge that in 2022, more than half of all corporate profits were generated in mining, while this sector employs just a fraction of Australia's workforce. Now that a few years have passed, we can see more clearly whether Australia took full advantage of this opportunity with hindsight. Australia holds an abundant number of natural resources. They have the largest reserves of uranium, nickel, and bauxite, which is used to make aluminium. They also have the third largest reserves of iron ore. This is almost entirely exported to China, which comes with some geopolitical considerations. Because what if they use this against Australia to achieve political or economic goals? But the part that is most often overlooked is how mining is affecting the lives of everyday citizens. Mining has the potential to transform a country if its revenues are well invested. So, to understand how well Australia did, let's start at the beginning. Australia was lucky from the start. In the 1840s, silver and lead were found in South Australia, and later they found copper in several other places. This led to a surge of immigration to Australia, and the hype got crazier when in 1850 they also found gold. Almost overnight, as much as 40% of the world's gold was produced in Australia, and mining now accounted for 30% of their economy. But by the early 1900s, their luck seemed to have run out. The world was starting to industrialize, and countries were thirsty for steel. To make steel, you need iron ore, which Australia believed it didn't have. They placed a ban on the export of iron ore to protect its own limited supply. But boy, were they wrong. The story goes that a miner and his wife departed in a small aircraft to head home to Perth, when bad weather forced them to take a detour. They followed a river valley on a low altitude, and as he looked out of the window, he noticed these massive red-brown outcrops that were lining the hillsides. He thought to himself that this could be oxidized iron. And after arriving home, he contacted the authorities and some investors to see if they could help him explore this region. But with the export ban still in place, nobody was too keen on getting involved. He returned several times and followed the iron ore over a distance of 112 kilometers, or 70 miles. He knew that this could very well be the largest reserve in the world. In 1960, the ban was lifted, and this kicked off a mining frenzy. The newly discovered iron ore deposits were now explored, and Australia got lucky that at the same time Japan entered its period of rapid industrialization, providing a ready market for its exports. It was a golden time for Australian miners. But nobody saw coming what would happen next.
Iron ore prices back to their highest level in 6 months.
The price of gold is now at its highest level ever.
The prices of commodities in the early 2000s shot through the roof. The price of coal increased more than fivefold, the same for gold. And iron ore prices increased more than sixfold. Australia's mining sector, which includes these commodities and many more, became an increasingly important driver of economic growth. Most mining companies were seeing record profits without even having to increase their production, simply because people were now willing to pay much more than 10 years earlier. But the companies mining iron ore went all in.
$16.6 billion in 6 months. This is a record. It smashed all-time highs.
In 2011, the price of iron ore peaked at over 170 Australian dollars, and the production of iron ore increased substantially with these increasing prices.
The mining industry continued to boom for the shareholders and, of course, the government.
This put tens of billions of dollars of extra tax revenue in the government's coffers. And it didn't even end here. In 2020, iron ore became the first commodity to ever exceed $100 billion in annual export value. And the subsequent years were even crazier. During these record years, the export value of iron ore was larger than the entire GDP of Alaska, Montana, or Hawaii, and this had far-reaching consequences for the country as a whole. There's a flip side to having abundant natural resources, as many countries in Africa and South America can tell you. In the short term, it makes a lot of money, but in the long term, it often leads to countries becoming less wealthy and less democratic. But the opportunity was just too great to pass on. Mining is an amazing business if you do it well. These are the profit margins by industry, and mining stands out with over 35%. And such earning potential helped mining stay at the center of policy focus for much of Australia's history. During the mining boom, the government responded by massively investing in this sector, reaching a record 8% of Australia's GDP in 2011. This is what some have criticized. While mining has tremendous profit margins, an overemphasis on mining can hinder growth in other sectors, like technology or healthcare, which are much more resilient to global changes. In the short term, countries that start exporting more of its natural resources generally get more demand for their currency, thus making it stronger. This also happened in Australia. This stronger Australian dollar makes it cheaper to import goods. But for sectors who rely on exports, like agriculture and manufacturing, a stronger Australian dollar makes their exports less competitive. The agricultural sector alone lost $61 billion in export income over 9 years. So mining does not just hinder growth in some sectors, it actually causes some sectors to shrink. But it also causes some sectors to grow. The industries that benefited the most were construction, electricity, and distribution services. These sectors service the mining industry, and they benefit from higher domestic demand, which is another effect of the mining boom. It increases purchasing power. The mining sector created more demand in the economy and added so much in tax revenue that the government could lower overall tax rates. As a result, the average wages grew by 6% and disposable income grew by 13%. It also added tens of thousands of new jobs in the highest paying sector of the Australian economy. The mining boom gave people more money to spend, but more purchasing power also leads to higher prices of consumer goods. One study calculated that food became 20% more expensive as a direct result of the mining boom. Total consumption prices increased by 10% and motor vehicles by 30%. Perhaps most urgently, the mining boom also contributed to higher rent and home prices. This is particularly troublesome because it takes more time for the housing stock to keep up with higher demand. There were many short-term costs and gains from the mining boom in the early 2000s, and in recent years, this sector has become even more profitable. It just continued to grow, and it's becoming an increasingly important segment of Australia's economy. But there are real concerns whether this is a smart long-term strategy. Australia has been dealt a winning hand. And if you're this lucky with the sheer abundance of natural resources, it would be illogical not to look for ways to sustainably mine these resources and to turn them into a force for good. But here's the problem. This is the Economic Complexity Index. On the top, we find highly complex economies like Japan and Switzerland. If we scroll all the way down, we find Australia at place 82 between Kenya and Sri Lanka. This is the lowest of any developed country, and this is primarily credited to their reliance on mineral exports. The mining boom contributed to Australia's lack of economic diversity, and I'll add one more. The shareholders are primarily foreign. These mines are for 83% foreign-owned. All these billions of dollars it creates in revenue, for a large part, isn't even going to Australian citizens or companies. And the profits that remain in the country are not equitably shared. If we just look at the 17% that remained in the country, 50% of these profits went to Australians who made over $250,000 per year, and 25% went to those making over $1 million per year. A con is that the rich profit the most, but this needs to be seen in context. It's true that the richest Australians are eating an increasingly large portion of the pie, especially in iron ore mining. But the middle class and bottom 10% of earners are also seeing their incomes rise faster than in almost any other developed country. The mining sector likes to emphasize that it raises overall incomes. Those who campaign against this sector say that the rich profit the most. Both are true. It leads to more inequality, but everybody is better off in the end. This is a major opportunity. Mining today is generating insane amounts of revenue, but they are a very poor taxpayer. The effective corporate tax rate in Australia is 21%, but mining is paying just 14%. Norway, for example, taxes its oil and gas at 78%. This helped Norway build the largest sovereign wealth fund in the world, and today you can see a clear correlation between how much this sector generates in revenue and how much their government makes through all different kinds of taxes. But in Australia, the government seems to be cutting itself short. While the sector experienced a massive revenue boost, the Australian government saw its revenues flatline. Just imagine the opportunity that Australia missed out on if it had adopted a similar strategy as Norway. Australia has such abundant natural resources, but much of this goes to foreign shareholders and Australia's richest people. Mining is a poor taxpayer, and it's very dependent on foreign demand.
China has suspended indefinitely high-level economic talks with Australia.
There's been an escalation in Australia's trade dispute with China.
One of Australia's biggest exports is coal, and its biggest trading partner is China. In 2020, a series of disputes led to China to cut all Australian coal imports.
China has formalised import restrictions on coal, targeting Australia's $14 billion industry.
Months of import delays have left millions of tonnes of Australian coal stranded off China's coast.
This left dozens of ships collectively carrying hundreds of millions of tons of coal anchored off China's coasts. Iron ore is now by far Australia's most important mineral export, and this is almost exclusively sold to China. Some fear that China could also weaponize this leverage to achieve political and economic goals. But it also goes the other way around. The world is simply dependent on natural resources. Australia could increase its geopolitical leverage by producing more. Take rare earth minerals. China is by far the largest producer, but Australia is also a major player. Increasing its production would increase Australia's geopolitical leverage, and as Norway has shown, it can be possible to sustainably invest revenues from these industries to diversify the economy and to provide for future generations. the earnings potential of mining is simply unmatched. It also lowers unemployment, creating the highest paying jobs in Australia, and it stimulates investment, which can be life-changing for people who live in these remote areas. Australia has been incredibly lucky, and they deserve credit for avoiding some of the major pitfalls that come with exporting natural resources. But the tens of billions of dollars that are generated every year are not as equitably shared as they perhaps could have been. Remember that point that I made earlier that China is producing most of the rare earth elements? Well, one of the metals that is receiving a lot of attention is tungsten. This is the metal with the highest melting point in the world. It's nearly as dense as gold and almost as hard as diamond. This makes it incredibly useful for military applications, but of course, China is by far the biggest producer. Australia comes in at place 7, but the United States is nowhere to be found. They are already the largest importer of tungsten in the world, and 35% of its imports come from China. And that's where today's sponsor saw an opportunity. American Tungsten, ticker DEMRF, today's sponsor, seeks to potentially become the first tungsten producer on US soil. At the moment, China is by far the largest producer of rare earth minerals, and they control an even larger portion of the world's processing capacity. This creates a strategic chokehold, especially in the context of the current trade war. China managed to reach this position by strategically investing in rare earths and by undercutting competitors with lower costs. This forced many US mines to shut down, and while there are no tungsten mines currently on US soil, it once was a thriving industry. All across the American West Coast and up to Alaska, there are literally hundreds of known tungsten deposits. But as long as China controls this critical metal, the US risks a sudden supply disruption that could cripple US industries, causing a security crisis of unparalleled magnitude. American Tungsten, US, DEMRF, wants to avoid this. They are seeking to secure key strategic partnerships and non-dilutive financing with the US Department of Defense and US Department of Energy for their flagship asset, a mine that once was the 5th largest operational tungsten mine in the United States. And you can be a first mover. Make sure to also do your own homework. I got a lot of the sources for this segment provided by the sponsor, but I went through the trouble to fact check each and every one of them. And I'll make all the sources that I found available for the link in the description. But do your own homework as well. I personally think that this is an exciting opportunity that could also help the United States become less dependent on China. And maybe you will be a shareholder.